Hey, if you're a new options trader or even a veteran options trader, what's your plan for making a trade? How do you decide when it's time to make a trade? For us, it's all about reading the stock charts. There's no other way to do it. I say this every week when I make these videos. If you're going to be trading options, the most important thing, of course, is which way the stock moves. Is the stock going to move in your direction that you need it to or not? And how do you decide if the stock's going to move in the right direction? By looking at the stock charts. So, as I do free for the trading community, I want to help everyone out. I make these videos on reading the stock charts. So I'm going to show you what I see. We want to get ready for next week's trading. So I'm going to show you what I do, what I see, how I set up my charts, and we're going to roll through some stocks and look at their charts and see if they're primed for a potential new trade. All right. So if you want to, try to up your option trading game, which I know for a lot of people, they need some help, reading the stock charts will definitely help you. All right. So let's just jump right in. Let me make myself a little small here. What you see in front of you. And for those of you that are new, and even for some veterans that have been watching me, we go through the same thing. I want to teach you guys how to do this. What you see in front of you is the stock charts that I use. Now, if you don't have a charting software or subscription, don't worry about that. You can use any charts. Down in the description below, I have some links. You can use TradingView. TradingView is a pretty popular charting platform. It's relatively cheap. You can even go on free stuff like Yahoo. But, you need to look at some charts. All right. So this is what I use. This is called eSignal. And up here, this is the price action. When you look at a stock chart, it's going to, chart out each day's worth of trading. You can look at different time frames. This is a daily bar chart. Each one of these lines is 1 day's worth of trading. All these vertical lines is 1 day's worth of trading. And on my screen, real estate here, we go back, almost 2 years in time. And there's really only a couple things that you need to have on your charts to help you gauge which way a stock may or may not go. And the most important one is the trend. The trend is basically which direction the stock has been moving in over a certain period of time. Now you can see these blue lines here. These are the channels that I draw. You draw these manually. How do you draw a channel? Well, you basically connect some tops that the stock chart has been making and some bottoms once it starts to get into a pattern, a month or 2, 3 months, whatever. And then you can see which way the stock is trending. And over time, you'll see that it bounces and hits resistance within the channel. And once the stock turns in another direction, you can see here, October 22, 2022, the stock market started to go higher. This is the S&P 500. This is the SPY represented by the ETF here. And you can see in October 2022, the stock market started to go higher, bouncing in between the channels. So that's the one of the most important things. The other things that I have on my chart, I use 3 moving averages, 3 simple moving averages, a 20-day, a 50-day, and 200-day. Very widely followed. Many people use those same moving averages. And when the chart action makes the same kind of moves off of those moving averages, everyone starts to trade the same way. So that helps keep the momentum going. So the moving averages are up here, and down here is the only oscillator that I use, the only other indicator I use, which is called the RSI, based on a 14-day look back period, and it oscillates between overbought and oversold levels based on the price action up here. Okay, and the way that you decide what's overbought or oversold is these horizontal lines right here. You got one here and one down here. It is at the 20 level and the 80 level. It goes from 0 to 100, the RSI. I use the 80 and the 20 level as the line in the sand that tells me if a stock is overbought or oversold, and it's based on the price action up here. All right. So what do we do when we want to try to figure out, are there any trades that may be setting up for the week coming forward? We look at the charts, but we always start with looking at the indexes, because the indexes, the stock indexes, and I'm talking about the S&P 500, the NASDAQ, and the Dow Industrials. And those will lead the markets because they're comprised of all the stocks. And, most stocks on a daily basis, individual stocks don't have a lot of news that's going to help drive their prices. But since they're part of the index, they're going to move however the index moves at that time because they just follow along, okay? So it's very important to see what the index is doing. So let's look at the SPY. As I said, it's the exchange traded fund that represents the S&P 500. It's probably the most liquid trading asset out there. Trades just like a stock. Now we draw some support and resistance lines, and those are just some areas where the stock hasn't been able to fall through and an area where the stock hasn't been able to get through. So that's called resistance and support. Now this line here, now I keep these charts with these prior drawings on them so you can see, you can check me over time, see what I've talked about in the past. And here's the last resistance line we had here, right around 460 on the S&P 500. So we were waiting for that area to break. And the more times it tries to come up against resistance, eventually it's either going to fall or it's going to blast through. Okay, so the S&P 500 got through that 460 level, early to mid-December, and it's been going ever since. Once a stock or index starts to go in a direction, it keeps going until something major pushes it in the other direction. And then in a very strongly trending stock will follow along or bounce off the 20-day moving average. The blue line here, this is the 20-day, here's the 50-day, and this is the 200-day moving average. So a nice strongly trending stock will bounce off the 20-day moving average first. And you can see the last two times that the S&P 500 came back down, it pretty much bounced right off that 20-day moving average. Okay, so this is all-time new highs. The S&P 500 has hit all-time new highs, and the index's stock market over time will go up. Okay, over the long run, the stock market goes up. And we've finally hit all-time new highs here. And the market looks strong. Yes, we're going to have pullbacks, but to me, there's nothing out there that's really going to hold this uptrend from stopping. Okay, so the S&P 500 looks strong. We're getting a little overbought, but we're not in extreme overbought areas. The only way to rectify this is that we have a little pullback. If there's going to be a pullback, it's probably going to pull back first to the 20-day moving average, which is right around $477, which is about $10 lower than where it closed on Friday, January 26th. Okay, so the market looks strong. Let's look at the NASDAQ, represented by the triple Qs, and we'll wait for the data to populate here. Same thing with the Qs. Look how strong the NASDAQ is. It just keeps going. And just like the S&P 500, it bounced off the 20-day moving average here. Things are strong. You're always going to hear the doomsayers, the guys and the gals they're always calling for a bear market. They always want a bear market for some reason. The stock market goes up over time. Let's take a quick look at let's move out to the monthly chart just so you can see long term. Okay, so my numbers here, my chart goes back to 1999 or so. Obviously, we know the market's been going longer than that, and it just goes up over time. Let me pull up the S&P 500 here and see if it gets some more data. And then my chart just may not be populating that. Let's look at the Dow real quick and see where that goes. All right, so right now I'm only getting data back to 1999, and actually, yeah. So look, the market goes up over time. That's how the stock markets work, okay? They're made up of actual companies that create actual products that people actually buy. And as long as they have increasing revenue, increasing sales, increasing profits, the stock chart can only go up. You won't find a stock chart that goes down for a company that's increasing their revenue and sales and profits every quarter. It just doesn't happen, okay? So the indexes will always go up over time. So the triple Qs, go back to those real quick on the daily basis, look strong, okay? So let's look at the Dow Industrials. Same thing, pretty strong. Pull it over here. And it finds support on the 20-day moving average. A very strongly trending stock should typically bounce off a 20-day. If it's not as strongly trending, it'll probably bounce off the 50-day. And if it starts to come off really hard, then the 200-day moving average down here is usually the last line in the sand. Okay, so let's start to look at some individual stocks and see what we may be looking at for the week ahead. Now, I usually run down my list here. We typically look at the bigger, more popular stocks because those are the ones that really drive the market. But my goal here when I make these videos and drawing on my 30 plus years in this business is just more showing you patterns and trends and how to, get an idea of where the stock may be going. Okay. So let's take a quick look at, we always start with Apple. Let's take a quick look at Apple. Now, Apple's been sort of a jumbled mess here. I want to go back and show you these patterns if you haven't seen my charts before. Now, Apple for a long period of time had this resistance at $180 a share. And this W pattern, this very long W pattern right here, is typically a bullish pattern once it resolves itself. Once it gets above, the legs here, these are the outer legs, and it should continue higher. All right, so that's what Apple did finally in July this past summer. Finally got out, bounced above it, and then had this pullback. We drew another support line right around low 170s, and Apple's bounced back. It's come off again. You can see it found support at the 200-day moving average, which is really the last line in the sand. And just recently, I talked about this. Apple had made some new highs here, $200 a share, pulled all the way back to 180. I said at that time, you can go back and watch the archives of these videos. This would have been a great area if you were looking to get long some Apple shares. $180 bouncing off the 200-day moving average would have been a good spot to nibble on some shares. It bounced and then it came right back down again, double bottom. That's something that's called a double bottom. Bounced off the 200-day moving average again, and look how it went up a nice $15 a share just recently. So the next move potentially for Apple could pull back to the 50-day moving average right here around maybe here's the number 190 and change. So look for Apple. If it's going to bounce, it'll probably bounce off this 50-day moving average and continue higher as long as the rest of the market continues higher. This is a big week. We've got earnings starting to come out. So I believe Apple has its earnings on Thursday this week, February 1st, I believe that is. So keep an eye on Apple. Earnings announcements could really drive a stock higher or lower depending on the numbers. So that's Apple. Let's look at Tesla because I know so many people ask me to look at the Tesla stock. Tesla is a monster. As I say every time, it's really hard for me to get a gauge, even for me being in this business for so long, to get a handle on Teslas. We don't trade Tesla too much because it doesn't give us real quality signals of which way it wants to go. But one of the the last videos I made here a couple weeks ago, I said Tesla looks pretty weak. The moving averages are sloping downwards here, at least the 20-day. That means the trend, the short-term trend, is going downwards. I said Tesla probably has some more to go on the downside. It was probably trading around 220 at the time a couple weeks ago when I made the last comment that I made. We weren't getting bullish on Tesla because it looked weak just based on the price action, based on the moving averages. And Tesla's dropped pretty good. It had its earnings come out last week. Numbers weren't that good. And, it's holding right on $180 was the low here. But here's the thing. You look down here at the RSI, it's gotten really low, oversold, has gotten even below my low level of 20, hitting 18 on the RSI. So that means Tesla is becoming oversold. Does it mean a bounce is going to happen right away? Does not mean that. It just means the selling is probably going to start drying up. It's oversold. People don't want to push it much farther because you can have a really strong snapback that could get some of these shorts caught in their position. So if you're looking to get long potentially on Tesla, this 180 level being so oversold could be an area where it finds support over time. It has to digest this big move. And how it does that is by trading typically sideways, maybe a little bit lower, but it'll probably find, it'll find a bottom here. You'll see some rounding, you'll see some sideways action, only because it's gotten so oversold. The numbers were not that good in the earnings, so people will it's resolving itself, and it resolves itself by moving lower and starting to find a bottom. So I'd say this 180 level, at least for right now, could be an area of support for Tesla. I wouldn't say jump in with everything that you have, but it could be an area where, the bottom feeders may come out and try to push it higher. All right, so that's Tesla. Let's continue with the biggies. Microsoft also having earnings coming out this week. Look how strong Microsoft is. We had this support area that we drew a while ago, and it bounced pretty good. And you can see it was hovering around the 20-day moving average here, connected with the 50-day, and then it just powered higher. So Microsoft making, new highs here. These stocks look strong. If they get through their earnings season with the numbers, being decent or within, the analyst ranges and have a decent outlook, they're going to just keep moving higher. So keep an eye on these. The NASDAQ is what's really driving. Let's look at Amazon. Amazon also looking pretty good. We had this, area right here that it was hovering around, and then it's just going higher. So even Amazon's looking good. Amazon may have earnings coming out this week also. So these big tech stocks. What else? Intel had earnings come out, so their numbers were not that good. So that dropped pretty good towards the end of last week. So, keep an eye on Intel. There may be some residual sellings, but we don't have any. We're not interested in Intel at this point. AMD, though, is a stock that we like. Look how strong AMD. Look at this power move higher, and look how it just hugs on the 20-day moving average. So when it does have a pullback, when it's in a strong directional move, whether that's upwards or downwards, it will pull back to the 20-day moving average. You can see that, and it just hugs along it. But AMD's had a pretty powerful move. It's got a little overbought here. There may be some pullback just to get some of the froth out of the stock. So be aware, after it's made a really strong move like this, where it goes almost vertical and the RSI moves into overbought territory, you don't want to start jumping on the bandwagon then. It's at the tail end of this current move. So be aware, be wary of almost vertical up moves. Gravity is going to take over. Doesn't mean the stock's going to start into a new bear trend. It just means it needs a little pullback, needs to offset some of that euphoria. We need the RSI to come back more into the middle of the range here. And then if it possibly connects with the 20-day moving average, that could be your next signal of, okay, this could be a higher probability area for me to get long AMD. But I wouldn't be a buyer up here at this moment. It's just gotten a little bit too ahead of itself. Okay, so you need to consider these things before jumping in. Let's look at the biggies, NVIDIA and Adobe. I mean, these stocks have just been driving. This is the channel that we drew on NVIDIA. If you ever want to know the symbol up here in the top left corner, is what we're talking about. 400 to 500 was the range for a long period of time. We said if it can blast through 500, it's going to go. It's storing up all this energy. And it also had the ascending triangle pattern right here. This blue line that I drew, this is part of the ascending triangle pattern, bullish pattern. Once it you can see it has the up move here. It just couldn't get through the top. And then once it did, it just powers higher. But NVIDIA, just like AMD, getting a little overbought up here, you can see on the RSI. So potential pullbacks for these really strong stocks. Doesn't mean they're in bear markets. It just means it's got to get some of the froth out. So look for the 20-day moving average, if it falls back, to be the next area of support for NVIDIA before it moves on its next leg higher. Let's look at Adobe. Just want you to be aware of the patterns and what these stocks do, because these patterns repeat over and over and over again. We had the support line for Adobe, and then it just went on its nice run higher. It's right in the middle here, so there's really nothing that's alerting me one way or the other that there's going to be a strong move to the down or to the up. But I have to believe the up is going to win out. Adobe is going to continue to drive higher eventually. Is there anything that we can draw here? Some people might say this is a triple top, or a head and shoulders pattern, I should say, where you have a shoulder, you have a head, and then another shoulder. That's typically a bearish pattern, but I'm not really seeing that so much. I'm seeing Adobe more in a bullish pattern. We can draw a little bit of an up channel here, and kind of we have we can use the last high as our resistance. So what I think Adobe's going to end up doing is it's going to channel along, it's going to move along this uptrending line, and then eventually get through the top here, which is probably around $630 or so. So keep an eye on Adobe. It'll have a resistance here for a little bit, but I think eventually it's just going to blast higher. What other stocks do we like to look at? Here, let's go through our list here real quick and see what I'm missing here. Oh, Netflix. Okay, so let's quickly look at Netflix. Strong. It had its earnings the other day. Look what happened. It was hovering right around. All this was just kind of jumbled up with each other, but it was in a nice uptrend. It was just waiting to resolve that earnings announcement, and it jumped, over about $100 a share. Nice move in Netflix. It's overbought at the moment, so it's going to resolve itself. It'll probably make some sideways action here, let the steam come off on the RSI, and once that comes down a bit, doesn't mean Netflix is going to come all the way down here. It just has to trade sideways for a bit for the RSI to come down. So it probably trades sideways for a little bit and then move on again to even more new highs. You don't really have to be afraid of buying these big moves up here after some of the froth gets taken out of it. Netflix could probably drop $20 or $30. Doesn't mean it's in a new bear market. It just means it needed to get some of this overboughtness taken care of. So you watch the RSI to come down a little bit, and that only might mean some sideways action, and then the price action will continue higher again. So Netflix looking pretty strong. Let's see what else we have in here. Disney. So I kind of like the pattern Disney's making here. What pattern is that? Well, it's more of an ascending move here. We've got the up move here, and let me get rid of that. Got to keep the computer free from viruses. And then we have the flat top here. So this is a pattern. This is that bullish pattern. You can even go a little bit on a longer term trend. Okay, so you got the movement here. Disney's definitely sort of in an uptrend. Here's the resistance right around maybe $97 a share. If Disney gets through that area, it's going to keep going. So, how do you trade this thing? If you want to be bullish on Disney, maybe you wait until you see it pop out of the resistance line. Let it get over $97 first, because you never know if it's going to fall back down first before getting through. So it's okay to wait until after the breakout. You want some confirmation. So I'm going to keep an eye on Disney. If it could get above 97 or at least above this line, whatever it is, we keep an eye on it. Then it's got the momentum and more people will get on the bandwagon, which means it'll just keep driving higher. Right? So keep an eye on Disney. What else do we have? I'm just trying to bring up some stocks to show you. Okay, Costco, another monster strong stock. I mean, we had the channel here. Once it gets through that resistance, it keeps going. And you can see how it's, finds the support right on the 20-day moving average. Like I said, a strongly trending stock will first find the support on the 20-day moving average with the pullback. You can see how it just perfectly bounced. Okay. Just the other day, it hasn't pulled back fully to the 20-day moving average. Don't know if it's going to just keep driving from here or may have another little pullback to the 20-day. Keep an eye on Costco. These are the things you want to look at. Not so much overbought, but it's okay. It's not overbought, not oversold. So keep an eye on Costco. McDonald's, strongish. Here's something I want to show you. Pepsi, trading in a tight range here, but it's bouncing off the lows here in the channel right around 165. So the next move for Pepsi is driving up towards the top edge of the channel. If it can get through there, then that should keep the momentum going. So you want to watch these channels, see how it reacts. Look at this, all this support here right around 165. It hasn't been able to truly get through that 165 level. So that means eventually the buyers should finally step up and get it out of this channel. So keep an eye on Pepsi in that regard. Okay, so here's Warren Buffett, Berkshire Hathaway. I'm going to show you pretty soon on our website something that you can potentially look at. Once again, the ascending bullish triangle was moving higher, moving higher, moving higher, and then it just blasted through that last previous high here. Look how strong it looks. Starting to get sort of near overbought areas, but this is Warren Buffett's Berkshire Hathaway. It trades like an ETF. It trades like a fund. So it's got lots of stocks in there that Warren Buffett has handpicked with his company. So you might as well just piggyback off of him if you want to just ride the coattails of, one of the greatest investors of all time. All right, so Berkshire Hathaway looks good. It's broken out, so I can only see higher moves coming in the near future for that. Meta, Facebook, we talked about this before. I'm not a fan of the company as a company, but as far as watching the stock chart, it was bullish. Ascending triangle, flat top, pulled back to the 20-day moving average, and then it just goes. That's how it works. Getting a little overbought, but that might mean a pullback to the 20-day moving average, get the froth out, get the RSI back down, and then look for the bounce off the next touch of the 20-day moving average. These are your higher probability setups. Okay, that's how it works. IBM, also very strong. Google, anything with Google? Yep, same thing. All these strong NASDAQ stocks, ascending triangle, had the resistance. Once it gets through resistance, it goes. Also getting a little overbought here. So you want to wait. Okay, it's made the move. You want to wait for the next pullback, probably to the 20-day moving average. If you buy up here, you're not getting into a higher probability trade because it's going to be really hard for the stock to keep going while it's getting a little bit overbought. So these are the things you want to look for. Okay. Anything else? Coca-Cola. Coke's had the big down move. I said, you got to buy here. Got so oversold. Great quality, long-term company, a stalwart. Now it's kind of trying to break out. All three of the moving averages are starting to converge here. It's trying to bounce off the 50-day moving average here. If it can get back up into the above $60, I think Coca-Cola is going to keep driving higher. And that's it. That's all pretty much what we need to show you. All right. So that's how you do it. You need to look for the patterns, the support and resistance levels, and watch the RSI. Those you want to get into higher probability trades. Let's quickly look at our website, the Smart Option Seller. This is our website. We're big on option selling. That's what we do. We sell put options. We sell put option credit spreads. Selling options has a much higher probability to win. The win rates are really high. Get our free ebook. What is that? Free ebook is all about how to sell put options. Okay, put selling basics. It's an ebook that I wrote. Put your name and email address down here. We'll send you an email with a link to get the free copy. If you want to see what else we're doing, here's our services tab. We have our newsletters. We have our coaching that could help you get to the next level. We have our 5-part video series on how to sell put options. If you're interested in selling put options, this 5-part video series could be something for you to look at. If you want to check the Warren Buffett report, go into the shop section right here. Okay. In the description below, I've got some links for things that you might be interested. So spend a minute or two scrolling through those. If you like this video, please give me a thumbs up, give me a like, subscribe, hit that red subscribe button in the bottom right-hand corner of this video. Leave me a comment, send me an email. I will always answer. I do these videos for free for the trading community, taking my 30 plus years of experience and knowledge and trying to, help someone, anyone. If I help one person, then I've done my job. All right. So I hope everyone has a great trading week and be well. This is Lee Lowell signing off.